What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. Today's video is about two strategies that I've been using to find altcoins that perform well, even as the rest of the market has been generally bearish. The first strategy is to rotate between layer ones, and specifically to rotate into innovative layer ones with big catalysts coming up. The second strategy is to find coins that are linked directly to the growth of stablecoins, and then watch for when those stablecoins increase in market cap, and then invest in the coin tied to the growth of those stablecoins. And I know that that's a lot to unpack, so I'll go through it more in detail later. Great, lots to cover today, so let's get right into it. First thing is, let's just do a quick market update. So yeah, this is not what a lot of us wanted to happen, right? A lot of us wanted Bitcoin to stay in the 40s, maybe push up into the over 50,000, but instead it retraced below. And this is on the back of the NASDAQ not doing well. It's on the back of oil skyrocketing in price. And you have a lot of different analysts calling for recession. So there's a lot of factors going into this. It's not just necessarily Bitcoin itself. However, the market definitely has taken on a bearish sentiment. And that means that it's difficult, although not impossible, to find solid altcoins that will perform well. So the first thing that I'm looking for, and this is sort of in any market conditions, is layer ones. And the reason for that is that when things are bullish, layer ones tend to perform the best. This past year we had Solana, we had Avalanche, we had Luna, we had Phantom, all performed phenomenally. Cardano performed very well in the first half of 2021 and then lagged a bit in the second half. But Matic is another good example. But basically those things tend to perform the best, and they tend to be easier to forecast further out than, for example, a specific ecosystem play on a specific layer one, because that adds another depth of risk where you need the layer one to perform well, then you need that specific ecosystem play to perform well. So what I'm looking to accumulate now are layer ones that are undervalued and are doing innovative things. And this has worked in other cycles as well. So here's an example from earlier in the year. You had AVAX, and it ran up, had initial run up back in February to almost $60, and then consolidated for several months. And this is when I started adding it. So I actually added it, didn't start adding it right at the bottom. I'm not going to claim that. I started adding it over here, it bounced around a bit, and then the whole market turbo crashed and it got really low. And the reason I'm showing you this is that this sort of price action is when you want to be adding these layer ones. When they're just ranging down, prices that would have seemed impossibly low a few months ago, but they have solid tech. You can see the team is still developing, and there's something tangible, unique that you can describe about what makes this project different. And so in this example, this is actually around when I started making videos about AVAX in here and accumulating, and then it finally had a catalyst come in the form of their ecosystem fund, in the form of their bridge, and it shot up, then shot up again, and then once again, and then went all the way up into the 140s. So for a solid 10x gain from the summer lows. And so basically what you want to do is you want to try to find coins that are in this bearish period, but that still are developing and still have solid tech. And so one example of one win we had on this channel recently was Juno. So Juno is a layer one on Cosmos, and basically they just launched their smart contracts earlier this year. But I think I first covered Juno on this channel sometime around October, and then covered it again somewhere in here. I don't remember the exact date when they actually announced when they'd be launching smart contracts, and that was also when I started accumulating Juno. But basically, you can still win sometimes if you accumulate after it starts to run. But when you want to be accumulating things is when they're not getting a lot of attention, when the talk in the community is around the tech of the project around the solid ecosystem developments that are coming up, around the vision, and in the price is sort of going sideways, and then you are already positioned for when it goes up like this. I mean, it's nice if you can get in here and get a nice 50%, but it's really nice if you can get in here and get 6x, right? That's when you really make the life-changing, or at least portfolio-changing wealth. And so that's basically what I'll be looking at with layer ones from now on. And, you know, sort of coming off the heels of a success in Juno, I'm trying not to be too overconfident, but a few that I'm looking at, one is still AVAX, actually. I like AVAX. They have catalysts in the form of their subnets. This one risk I do see with this is that they do have a lot of supply that's not in circulation yet. So if things stay bearish for, say, a year before they get their catalyst, it might be a challenge for them to reclaim these prices. However, this is one I'm cautiously accumulating and will accumulate more if it drops more in price. Another one is Atom. So Atom has been a decent performer this year, although the ecosystem has generally performed better. But Atom has a lot of cool things coming in terms of changes to their tokenomics, in terms of a lot of new projects launching chains that are built on Atom. And Atom's really, you know, it's not fair to call it a layer one. It's more of a interoperability protocol. It doesn't really fit quite neatly into the term layer, but it's still an ecosystem, so it gets that network effect from an ecosystem growth. And it's not going to show us trading view here, but yeah, so Atom would have been great to accumulate it here. Even now, I mean, it's still sort of consolidating a bit, but if this starts to drop lower, then I'll be going in heavier. Another one I like is Secret, and it's almost impossible to find a good chart on Secret. However, yeah, basically Secret is really retraced from its highs right now. It hasn't really found that sort of smooth bottom that we look for, like it was over here in the summer. So again, I'm cautiously adding it, and if it really starts to drop and then bottom, we'll be adding it heavier. But Secret is a privacy network. I covered it recently, and there's a lot of interesting catalysts in terms of games, in terms of DeFi projects that will be launching on Secret. They also have an ecosystem fund they announced recently. So there's a lot of cool stuff coming for this layer one, and it's one that I'm looking to add. And then the final one that I'm looking at right now is Metis. So Metis is actually a layer 2 on Ethereum, but I think that at some point, at least one layer 2 will gain some traction, because there are a lot of people in the Ethereum community who don't like other chains, but do like layer 2s. And yeah, Metis had this run up, and then it's just been consolidating since January right now, you know, in this range here. And so this one I've actually started to add a bit of now. I started to add as a position in my portfolio because they have a lot of, you know, strong partnerships and ecosystem developments in their ecosystem. And so those are basically the ones that I'm looking at right now, but it's really important to stay nimble with these. I want to emphasize that. And you almost have to be a bit mercenary with these sorts of rotations. Excessive loyalty to one ecosystem can and will get you wrecked. For example, in 2017, 2018, there were 2 layer 1s called Neo and EOS. They never hit their all-time high again. So in 2021, they did have run-ups, but they never reclaimed their old all-time high. And I know people who held them from 2017 and were expecting that, or held them from 2018, were expecting them to reclaim their all-time highs. They waited years, and it just never happens. Sometimes you have to be a bit mercenary, and you have to say, okay, where is the latest development? Where is the momentum? Even there were some coins that did well in the first half of 2021 that did not do so well in the second half. And I'm not going to call out specific coins, but you can probably guess the ones that I'm thinking of. So you have to be a bit mercenary on this. And that is the first strategy as far as layer 1 rotations. The second strategy is to find coins that have to be either burnt or locked up to mint stablecoins. So that's what I meant earlier when I said coins that are tied directly to stablecoin growth. The most well-known of these is Luna. So Luna has to be burnt in order to mint the UST stablecoin. And so that means that as UST grows, Luna is taken out of circulation, and it also adds buying pressure because people who want to mint UST have to buy and burn Luna. And if they're burning it right away, then they might be somewhat agnostic as to the price. But there's actually other coins that function similar ways, and a lot of people don't know that. One, for example, is Waves. Waves is not burnt, but it's locked up to mint the USDN stablecoin. Another one is Frax. Frax is partially algorithmic, so it's not one-to-one, but Frax is burnt in order to, or FXS is burnt to mint Frax. And there's several others. There's Vader, which I've covered on this channel. There's Haven. There's the new Shade protocol, which launched on Secret. There's several others as well, including some that haven't quite launched yet. But basically with this, if you can track these stable coins and find when they start to gain momentum, then you can buy the coin that's benefiting from that stablecoin growth. And the really cool thing about this is that stablecoins have been growing even during the opening stages of this bear market. We'll see whether that continues, but because you can earn pretty good yields on them, a lot of that demand for altcoins has shifted to demands for stablecoins. And so there are tokens that benefit from this demand for stablecoins. The reverse of this mechanism I just described is that this can also work in the opposite direction, where if people are, for example, getting rid of UST, then they could use it to mint Luna. So in theory, if the ecosystem really contracted, then the supply of Luna would increase and that would drive the price down. But so far what we've seen is that the demand for stablecoins has gone up in the bear market. And so that's led to some strong price performance compared to other altcoins for some of these ones I just mentioned. And so let's look at a bit more about sort of what this looks like. So for example, here is the UST market cap, and you can see that this really started to take off on November 9th, started to grow at a relatively fast clip. And then if we go back over here and look at the price of Luna, we can see that November 9th, it sort of actually trended downwards for a few weeks. And then this demand for UST caught up with it eventually, and it started to run really hard. And this was long after Bitcoin had peaked. Bitcoin had peaked, weeks or a month before at this point. And then it continued to run as UST grew all the way until the end of December. Retraced, and then once UST started to grow faster again around February 9th. See, so February 9th over here again, we had a delay of about a week and a half to 2 weeks, and then Luna started to increase in price. And so the cool thing about that is, and I'm not saying this pattern is going to repeat exactly, but the cool thing about that is that you could see that UST started to increase. That gave you some time to get positioned, and then the price of Luna started to increase. And let's look at a few other examples. So Frax is another one, like I mentioned. Frax is partially collateralized, partially algorithmic, and the token FXS is burned to mint Frax. And so Frax was sort of, steady for a while and then started to grow in the beginning of November. And if we go and look at the price of Frax, we can see that this one started to increase around the same time. And as Frax steadily increased, FXS grew from being a few dollars to being around $25 in a relatively short period of time. Retraced, but Frax continued to grow, and then eventually FXS started to grow again as well. So this is one that I'll be watching, for example, and see whether we can see a resumption in this price increase or market cap increase for Frax. Additionally, FXS is coming out with a separate coin called FPI that'll be airdropped. So this one gets a bit more complicated. However, you can still see how the increase in stablecoin market cap led to an increase in FXS. Another one that I think is really cool is Waves that I mentioned a second ago. So Waves has really, really been doing well over the past couple of weeks. But if you go over here to the USDN chart, USDN is minted through a protocol called Neutrino and USDN market cap really started to increase over here. So a couple weeks ago, say the 15th of February, it bottomed out, started to increase. And then you can see this. We had a couple days delay. And then about a week later, the price of waves started to follow suit. And then just the market cap of USDN has really grown at a remarkable pace right now and is close to passing its all-time high. And we'll see what happens with the price of waves. But so far you can see how that's reflected in it growing very, very fast, even during a time when the market was not doing so great. And so how will I be playing this in the future? Well, I'll be watching these coins I already mentioned for sure to see how their stablecoins can grow. And I'll also be watching some smaller ones that have similar mechanisms. So for example, Haven is a similar mechanism, although it can also be used to mint other synthetics besides just stablecoins. However, it's been seriously wrecked since November. I mean, it's down like more than 90%. And this is the supply of the synthetics on it. You can see that XUSD, the red line here, has actually been decreasing, which is part of the reason why probably the price hasn't been doing as well. But it's been increasing the past week. And so what I'll be looking at is whether that XUSD market cap can continue to grow. So my point in this video is not that you should go out and buy Haven, although I think it's a cool project. My point is that I'll be watching, and if you want to do the strategy, you should be watching to see how the market cap of these stablecoins change. And if, for example, if we saw XUSD start to get some sort of catalyst and start to really increase at a faster pace, then that could be a good sign to start investing in XHV, because XHV is tied directly to the growth of its stablecoins. And the same thing goes for Waves, although that's doing well right now. But the same thing goes for FXS, and the same thing goes for some other protocols like this. Vader, for example, is another one. And by the way, so if you want to see sort of more up-to-date analysis on this, on Twitter I post a lot of quantitative analysis and other observations about the market that I just that don't warrant their own videos on YouTube. So if you want to see that, you give me a follow over here at Dynamo_Patrick. And so here's a thread I did just yesterday with a bunch of analysis of different DeFi metrics. But yeah, those are the strategies I've been using, and I think that even if things turn bearish, we'll be able to find some good opportunities. We'll still be learning about DeFi. We'll still be growing our portfolio through yield farming. So the best days are yet ahead. And that's all I got for today. Till next time, this is Dynamo DeFi.